Hold on to your seats as we dive deep into the 40% plunge in the unit price of Brookfield Infrastructure Partners, or BIP. A significant dip in the market like this can set off alarm bells, but let's not jump to conclusions just yet. Let's first try to understand the factors that led to this decline. The primary culprit appears to be market concerns over interest rates. But is this the whole picture? Hardly so. To fully comprehend the situation, we need to look at BIP's business model and its diversified portfolio. As a global infrastructure asset management company, BIP is no small fry. BIP has a diverse portfolio of essential infrastructure assets, including transportation networks, energy facilities, and data center infrastructure. These are the veins and arteries of the modern economy, pumping life into cities and industries around the world. This diversification is not just for show. It's a strategic move that allows BIP to weather various economic climates. In the second quarter of 2023 alone, BIP's segments produced $552 million in funds from operations, or FFO, placing the partnership on an annual run rate FFO basis of approximately $2.1 to $2.2 billion. To further bolster its position, BIP has been investing in strategic growth projects, particularly in data centers. The partnership has made a strategic investment in Compass Data Centers and expects a significant increase in FFO in the data center segment. So with such a robust business model and diversified income streams, it does seem like the market concerns over higher interest rates may have caused an exaggerated reaction, leading to the unit price decline. But is this decline a cause for alarm or a potential buying opportunity? Stay tuned as we explore further. Now let's delve into BIP's financial performance. Numbers don't lie, and in BIP's case, they tell a compelling story. In the second quarter of 2023, BIP's various segments generated a total of $552 million in funds from operations, or FFO. This puts the partnership on a projected annual run rate FFO basis of roughly $2.1 to $2.2 billion. Impressive, isn't it? One of the interesting things about BIP is its strategic growth projects. The company is not just sitting on its laurels, it's always looking for new ways to grow and enhance its profitability. One of these projects is its investment in data centers. Data centers, as you may know, are the backbone of the modern digital economy. They store, process, and distribute large amounts of data, making them essential for many businesses. BIP has made a strategic investment in Compass Data Centers, a company that specializes in building and operating these data centers. This investment is expected to significantly increase BIP's FFO in the data center segment. It's a move that not only diversifies BIP's income streams, but also positions it to benefit from the continued growth of the digital economy. Let's not forget that the utilities segment is the largest generator of funds from operations. This segment's performance has been consistent, and it continues to be a major contributor to BIP's overall financial health. Despite the unit price decline, BIP's financials paint a promising picture, don't they? But there's more to this story. What if we told you that this decline might be an exaggerated reaction and could present an investment opportunity? Intrigued? Let's investigate. Brookfield Infrastructure Partners, or BIP, has a rich history of nurturing its dividend, a key factor that has made it a darling among passive income investors. The low payout ratio, which is the proportion of earnings paid out as dividends, further solidifies the company's commitment to its investors. This low ratio indicates a high margin of safety, meaning the company has ample room to navigate through financial hiccups without endangering its dividends. Now let's turn our attention to the distribution yield. At the current unit price, passive income investors can lock in a distribution yield of 6.6%. To put this into perspective, this is a return rate that many would consider generous, especially in today's low-interest environment. But there's more to this story. BIP's units are selling at an FFO multiple of 7.6 times. In layman's terms, this is a measure of how much investors are willing to pay for each dollar of the company's funds from operations. A lower multiple can often suggest that a stock is undervalued, and in BIP's case, it is considered cheap, hinting at a potential bargain for discerning investors. However, as with any investment, it's crucial to consider potential headwinds. In BIP's case, these include slowing FFO growth and moderating dividend growth. These factors could impact the company's future performance, but it's important to remember that investing is about balancing potential risks with potential rewards. So there you have it. BIP, despite the recent decline, appears to be a compelling passive income investment with double-digit FFO growth expected in the near future. As we near the end of our deep dive, let's recap the roller coaster ride that BIP's unit price has been on. Initially, we saw a significant drop, a 40% decline from its 52-week high, primarily driven by concerns over rising interest rates. However, as we examined BIP's financial performance, we discovered a well-covered dividend and diversified income streams, suggesting this decline may not be entirely justified. BIP, a global infrastructure asset management company, operates a diverse portfolio of essential assets, including transportation networks, energy facilities, and data center infrastructure. In the second quarter of 2023, BIP's segments reported an impressive $552 million in funds from operations. We also delved into BIP's investment appeal. Despite market concerns and potential headwinds, BIP presents a compelling opportunity for passive income investors with its history of growing dividends, low payout ratio, and a distribution yield of 6.6%. Remember, the world of investing is always full of surprises. But with thorough research and a keen eye, there are opportunities to be found even in the most unexpected places.